Hey, gang, this is Carl White, and you are listening to the Scotsman Guide Loan Originator Edge, where we give you the edge by listening to what some of the top originators around the country are doing. And today, our special guest is the one, the only Miss Jennifer Beeston out of right here in my own home state. You're down in the south part in Miami Beach area.
Yep.
And so, wow, you might be you might be the first Floridian top originator
Great.
that we've interviewed. So it's great to have you here.
That's exciting. Well, thank you for including me. I'm excited to help loan officers get the edge.
I like that. Hey, so here's the thing. I need to add you. So we were talking a little bit before we hit the record button. You seem like the nicest person ever.
Yeah.
I need you to take your humble hat off, though. All right. So take your humble hat off because the purpose of doing this is to inspire, right? And your numbers are inspiring. And
Thank
so we're
you.
going to talk a little bit about your numbers and frankly, like how'd you do it and maybe some advice that you give us to approach the kind of numbers you're doing. So let's start with the results first.
Mhm.
And so like how many loans or the volume? Let's go a little bit into that first.
I actually looked this up before our call because I like to be correct. So we'll do year to date numbers. So year to date, I'm at 125 million, 330 closed loans. I've got 84 locked right now for 36 million. Let's see here. 94% of my business is purchase and 80% is Govy, and my average loan is 381. Spitting facts to start it off.
Holy cow. All right. So I think I got most of that.
And I did average loan because a lot of times people just assume that like if you do volume that you're doing big loans because
yeah.
sometimes we see that in Scotsman Guide. We'll see like 90 loans for 200 million and you're like, what?
Yeah. Yeah. I
Must be
thought
nice.
what about the gal in Arkansas? Let's give her a fighting chance,
Yes,
So
yes,
yeah, I hear you.
yeah.
So your average loan's 381. Did I get that right?
Yeah, and I'm all over the map. So it's like nothing's too small, nothing's too big.
Yeah.
I think one of the biggest problems in our industry, and I don't hear it as much as I used to, as when I was younger, but I used to hear people that would say to me, because I started off in California, and they would say, "Well, I don't touch anything under 500K," and I was like, "Cool." I will call every
Awesome.
single person,
Yeah.
that does that. And I think that's one of the reasons I've survived the last few years is I've always had that attitude of I don't care how big or how small your loan is. I'm going to treat you the same and I'm going to give you everything I got. And I think
Yeah.
that's something loan officers, I think it's a good message because a
Mhm.
lot of times people just go, well, I won't make enough on that loan to be worth my time. And it's like, these are people. These are people who need a home. And if you do what's right, you're always going to be successful.
Yeah. And you'll get referrals from it. That's like,
Yeah.
sometimes when I go onto Amazon, I
Mhm.
order a pack of gum, literally, which there's zero chance they make money on that purchase.
Yeah.
And then other times I do two, three, I buy a computer, right? Or big screen TV. So I like your attitude on that. And just for clarification for people listening, as we're recording this, this is the middle of August. So when you said year to date, so we're what? We're
August 14th.
August 4th, we're 7.5 months into
Yep.
this.
Mhm.
And so just past the halfway point. And so 330 loans so far for the year. Man, some pretty striking numbers. So if we do, so what's 330 divided by seven?
Oh god, I'm glad you got a calculator near
It's
you.
a good thing we're math geniuses. So 330 divided by seven. So like 47 a month, give or take. So somewhere in that
Yeah,
range.
I mean, I would say this year started off a little bit slower, and it's really been the last few months that it's been like, "Yes, let's go, let's go." So I'm excited about that. I hope, the rest of the year ends out strong. It's gonna be really interesting with all the changes happening to our industry,
Mhm.
what the end of this year is gonna look like.
Yeah. What's the and maybe we'll go into the top one, two, or three, but what's the number one thing that moves your needle, do you think?
Like in terms of business?
Yeah, and for your volume, like to do the kind of amount of loans that you're doing, 330, averaging, 50 a month is a pretty good number.
I mean, look,
Uh,
I have an amazing team. Like, let me be real clear. It's not me doing everything by myself. I am originating every single loan. It's all from, videos I've created, everything's, but my team's amazing. It's made up of people where I would argue they're industry veterans that got worn out by the system, right? Because
mhm.
that can happen in lending.
Yeah.
If you're not at the right company, if you're not partnered with the right people, lending cannot be fun. So I've got this really cool team that is so passionate about making a difference. And because I'm really VA heavy, it keeps all of us wanting to come to work every day because we know we're making a real difference.
So I get the team, right?
Mhm.
And I'd like to go deeper into that, like what does it look like? But before we do that, so to close, um, our ratio of leads to close runs between 20 and 25%, give or take. If I want to close a loan, I need 4 to 5, leads as a general rule, somewhere in that ballpark. So to be generating 330 loans, you're getting a lot of leads.
Mhm.
Where's the most of them come from?
So at this point, the bulk of my leads is social media. So I was an early social media adopter. I have a YouTube channel where I do a ton of consumer education. I've been incredibly consistent about it. And at this point, YouTube, Instagram, LinkedIn, wherever, that's where people are finding me. It's people who want honesty, transparency, and no bullshit. To be blunt, Carl.
What's your primary message? So when you're doing it, are you going consumer direct?
Yeah.
What's your primary message? What's the hook?
I wouldn't even argue that it's a hook. It's like, look, the reason
Oh
I do
no,
so many
there's a
videos.
hook. There's a
Okay,
so for me a hook means tell me more.
okay.
So what's the draw?
The draw is that people want to learn about buying a house and nobody's teaching them. You
Mm,
know, they want to understand the process. They don't want to get ripped off. They want to feel, like they're going to be taken care of. Buying a house is a really big deal. And so many people make it transactional. And there's a lot more that goes into it. It's like a lot of the people that I work with, they may have originally reached out to me 4 or 5 years ago. I'll have people call me and they'll say, Jen, I've watched every video you've done. There's over 2,000. So the difference between me and the average lender is that I'm really out there, and everybody doesn't work with me. They work with other lenders too. I want to leave a mark on the industry. I want to make it better for consumers overall. And I want the nonsense that harms consumers to end. And the way you do that is education. So my business is a big driver in my business is it's a passion project. Like especially in the VA space, I am so sick of seeing lenders rip off veterans. I get the loan estimates where they'll be at 7.625 with 2 points. I'm at like 6, no points, no lender fee. How is that okay? So my whole business is about achieving my ultimate objectives, which is unusual, but I do think it's something where if more loan officers leaned into making a difference, leaned into making an impact and a change for the better, I think they would do better business.
So how many what's your so going consumer direct, what is your lead to close
No clue.
ratio?
Carl, I track nothing.
Interesting.
I know
I
that's
could
every
I could
coach's
help you with
nightmare.
that. I could help you with that. So
I'm never going to track it. Like, that's the thing. Like, everybody has what motivates them or what moves them. And like, I'm not trying to hit a certain number. I'm trying to make sure that anybody that reaches out to me, that finds me, I want to make sure that they have a zero stress mortgage process. But even if I don't end up working with them, I want them to feel validated and heard. And that's the thing. Like, I get people with lower credit scores all the time. And one of the things I hear all the time is, thank you for calling me back. what is wrong with our industry where people don't even have the common courtesy to say, hey, like I got your application. This is where your score came in. Here's what I would suggest. And I'm not saying we're credit experts. We don't do any of that, but we'll say like, hey, like, look, you haven't been making your payments on time. Here's a couple things to do. Or I noticed this. That's what drives me. It's when people come back years later and they say, Jen, like we had a gal, she didn't have a job. She had terrible credit. Like her life was a mess. 3 years later, all the puzzle pieces were together and she's been a homeowner now for 2 years. It was a life changer. That's why I'm here. I know it's
So,
unusual.
so walk me through. So a lead comes in. Is it typically a phone call, or is it typically they went to a website and filled out an app or an opt-in of some sort? Like how do most of them start?
So many different ways. I mean,
But
look,
but but most of them, whether they're either clicking something online or they're calling in. So they're doing
right.
one of those two
So, I mean,
things.
look, they're either booking my calendar, they're calling directly, they're texting directly, or they're filling out an application. It's
Okay.
literally like, look, it's a new business model in the mortgage industry, right? Like, you haven't really, a lot of the other people in the social space, they're just selling people as leads to call center. So it's basically taking the retail local lender model, but doing it at a larger scale, but retaining that intimacy.
And
That's
so,
what I'm
all
doing.
right. So a lead comes in, and whether it's online, phone, text, whatever, who does that normally go to? Like, who's the first person that goes to?
It's going to depend again. So I've got a couple gals on my team. Sandy and Alyssa are the main ones. They are fully licensed, different states, wonderful. And literally, I hired both of them just to answer questions. That's it. So if someone's thinking of buying a house 2, 3 years from now, cool, call us. They'll put together a plan with you. We don't charge for this. If someone's like, hey, can you look at my loan estimate? That's going to go to someone on the team. A lot of times it's me who's licensed in that state who's going to say, oh my gosh, you're getting a great deal. You should hug your lender, give them a high five. Or they're going to go, you're getting screwed. Here's how we're going to fix the problem. So, you know,
All right.
yeah.
So a lead comes in, and depending upon which way it comes in, it goes to one of the two people primarily.
Mhm.
All right. And so then what happens then? Do they, if that person is the initially seems qualified, do they take the app then over the phone? Do they send them a link? Like what happens next?
I mean, we have templates that go out. I'm actually against phone applications and I'm more against it with the deep fake technology we're seeing. Like it scares me at this point. And I really want to make sure that buyers or borrowers' information secure. So we're definitely digital mortgage. I want everything uploaded in the portal. So look, if they fill out an application, then it goes to Jen or Sam on my team who are highly licensed again. They're
Okay.
going to clean it up, we structure it. I fully underwrite every single pre-approval. Okay. Once in a while, we get a client that's like, I don't want to do it. And we're like, oh, please do it. I love a fully underwritten pre-approval. It
Yeah.
goes through underwriting. And then I'm personally spending 30 minutes to an hour on the phone, set time with the client, going through everything. This is what the underwriter said about your file. This is what I might need. Let's go through closing costs. I go through it line by line. Let's look at a rate sheet together. This is how rates work. This is how the market works. Have you selected a real estate agent? Show me a house that you're looking at. I want to make sure that you're looking at stuff that's financeable. Also, as someone who's bought terrible houses, here's a couple things to look out for, and I'll look
Yeah.
at the pictures and I'll be like, hey, like, see that ceiling right there, that dark spot? You want to pay attention to this when you go in. So analyze the pictures before you go in these houses, because once you go in these houses, the emotions are going, you're not paying attention. But
Mhm.
my whole model is about do not go shopping until you're comfortable with the payment, you understand the closing costs, we've gone through everything, and you're educated and empowered.
All
It's
right.
intense. It's intense.
So a lead comes in, one of your
Client calls. I hate thinking of them as leads, like they're people, but yes. One of
Okay,
my gals talks to them. If they fill out an application, we get them structured, we go to underwriting, and then I'm going through everything with them tip to toe.
got it. And then once you pre-approve them and they go out look for a house,
Mhm.
as they're looking for the house, what happens next?
It depends. So, like for instance, if they don't have a real estate agent and they want help with a real estate agent, I have a gal on my team. We look at reviews, we look at everything. We do not take any money, we do not ask for business, we do not get gifts. We just want them to be with a good real estate agent because, as every mortgage lender knows, a bad real estate agent is harmful to the client and it makes our lives miserable. So, sometimes we'll set them up with agents if they would like. Um, Last year I gave out over $100 million in business to real estate agents. Like,
What percent, and if you don't track it, but just more or less, what percent come with a like already have an agent or versus don't have an agent? Like, what would you?
I would probably say maybe 30% have an agent,
Yeah, I was going to guess
you
that.
know, because look, here's the thing. A lot of people think the first process of buying a house is the real estate agent. It's not, it's the lender because there's no point in going to that real estate agent unless you know that you can actually perform and you're comfortable. So, a big part of my education, and I think what could a lot of loan officers should and could do is start educating people on we're the first step, right? Because then you're in a position where, let's say the client's only comfortable at 400, but they can qualify to 500 if you max qual them. If they go to the real estate agent first, they're going to start at 500. And it's really going to be hard to get them back to where they're comfortable.
Yeah,
And as a long time referral, reviews, everything else, you're unlikely to get it if they're uncomfortable. Like I don't want people making emotional decisions because that hurts their wallet.
yeah. What? So with 80% of your loans being Govy,
Yeah.
what do you think you're doing different? That like, are you in some fashion targeting those people? Is it just by chance? Like, why do you think it's a little Govy heavy?
So I started years ago. Look, the VA pricing discrepancies in the industry, I think, are really disgusting. And it bothers me from a core value level that I know that there's stuff like if you're rich, you get a discount if you have money with a bank, but then some of the places that are giving discounts to rich people are charging veterans more. That's not right. So I started educating pretty heavily. At least once a week, I do a video about VA. Because look,
Okay.
VA is an incredibly amazing loan. And it's something every single loan officer should have in their toolkit. But there's so many variances to it. And most people, like, look, I didn't even know when I first started out that you could have multiple VA loans at once.
Right.
There's not great education on it. So,
So on these videos that you're doing,
yeah.
a lot of them talk about Govy type loans. Hence, you would be
Once a
getting.
once a week, yes.
Okay.
So
All
I
right. Got
usually
it.
do 3 to 4 videos a week, and there's always gonna be at least 1 VA video
Got it.
because I've said it before and I'll say it again. I am not gonna retire until veterans are known as the most aggressive rate shoppers, period. And there's a lot of work to be done. But the beautiful thing about the community is they talk and it spreads, and it's like, they protect us. Like,
Mhm.
how could there be this level of discrepancy? It's just
Yeah.
not okay.
How long is your average video that you're sending out?
Oh God. Uh,
Average, more or
so,
less.
no, there is so like anywhere between 6 and 25 minutes.
Okay. All right. Very good. 6 and 25, and you're doing them 3 times a week, is what I just heard you say.
Yep, and they're one take. There's no editing.
Yeah. Nice and simple. Is there one platform that tends to work for you better than the other?
I mean, look, for my style of content, YouTube's a good fit, but there's other producers in the creator space, like Greg Sheard, NFM. He's got a bunch of people over there that do excellent on TikTok and Instagram. And there's people who are crushing it on LinkedIn. So it's going to depend on what a loan officer's individual brand is.
But for you, YouTube seems to be your best hit.
I like long content. I'm a good rambler.
Yeah, I hear you. I couldn't agree with you more. I think, sometimes I hear people say, well, the video's got to be under 30 seconds. And I go, well, if somebody likes you, I always like, I personally don't listen to it, but the number one podcast in the world is Joe Rogan's, and
Mhm.
his average episode is 3 hours.
Yeah, that's a long time.
Crazy,
But,
right?
but but people are comfortable with it. I mean, look, it depends on the personality for sure,
Yeah.
right? But I'll have people where they're like, "Yeah, I listen to you while I do, the chores," or
Mhm, mhm.
I work with a lot of truckers, which is super fun because I get to learn all about the United States. But they've
Interesting.
got long drives, commuters. Um, like anything. It's just one of those things where if someone connects with you, it's magic. But also
Yeah.
it's like now if someone's coming to me because it's a real estate agent referral, I'm always saying, "Hey, like check out YouTube and if you like me afterwards, we should work together." I'm not everybody's cup of tea and I don't want to be and I don't expect to be because if everybody loves you, you're not anyone.
Yeah.
You're not authentic. Like so
Yeah. If you had to start all over again, what one thing, like what do you wish you could go back and tell yourself, I don't know, 10, 15 years ago? Like what's the one thing like, boy, if I could do it again, man, would I focus on this?
that's a tough question because I don't like to live in the land of regrets. The
Well,
one
all
thing
right, let me ask it a different way.
I
So
have an
somebody
advice
some
for you.
somebody that's listening to this, what's the one thing you'd say, make sure you go do this?
Look, if you're a brand new loan officer, you need to know your guidelines, right? And that's not, I wish I had done that. Like, I knew my guidelines. I knew that from day one. It was beat into me by my managers at the time. You need to be fearless. You need to go into those open houses. You need to call that real estate agent. You need to determine your business plan. Um, the only thing I regret from my career, right? Because I don't think I would have been as successful on social media if I had started sooner. I think I needed to have, I was a lender for 12 years, about somewhere in there, before I started social media. I had so much experience from crazy situations that it gave me the content. I think
Mhm,
if you're a new loan officer trying to do content, you're going to run out real quick, you know, personally.
mhm,
So I'm very happy about that. The only thing that I look back on and I go, I wish I had been more present with my son when he was little.
mhm,
Because the thing about this industry is it never stops.
mhm.
And especially when you're starting out, I remember, every time we went to Disneyland, "Hey, baby, hold on, I got to take this in the car. Hey, sweetheart, can you hold on? Mommy's got to take this phone call." The amount of times I said, "Hey, honey, can you," always putting him second, right? To whatever was raining. And at that point, my business was really heavy real estate agent based. And when your business is heavy real estate agent based, you have to jump, you have to dance, you have to perform. I mean, I had a real estate agent call me on my wedding day to talk about refinancing his house. He knew I was getting married. Like it was just mind blowing. So, the beautiful thing and what I would say to new loan officers, figure out how to get to the client before the real estate agent. Set aside time with your family. You will never get that back when they're younger. You'll never get it back. And look, I have a great relationship with my son. He
I
works
get
with
it.
me now. He goes to college. There's no drama. Like, he's not like, but I hate that I did that,
Yeah, I
and
hear
that
you.
could
I
be
hear you.
mom guilt too. But look, I also came home. I was here at 3 o'clock every day too.
Yeah.
I was
No, I,
working,
I get it. And
you
this is
know,
it's not a, like for me, it's not
yeah,
about having regrets. It's about learning from like learning how to do it even better. And so
yeah,
I wouldn't call it regrets. It's just it's like we have newfound knowledge and boy, it sure would have been nice to have this knowledge in the
setting
past.
boundaries. I wish I had set boundaries because
Hmm.
that's the thing. I thought that in order to be successful, I had to be available 24/7. It's not true. And even with certain real estate agents, like early in my career, a guy said to me, he said, "Jen, I just want to let you know I'm not going to call you after hours. I'm not going to, your family time's important." I was too young because what I said is, "Oh, don't worry. You can call me whenever."
Hmm.
He knew more than we didn't end up working together because he hated that answer, but set some boundaries. And the people who won't fall within those boundaries, don't work with them. There's, if you're like, "But my business real estate agents," guys, there's so many great real estate agents that will respect your boundaries. And what I have found upon reflection is the ones that were calling me at 9 o'clock, 10 o'clock at night, talking to me about their boyfriend problems that I thought I had to like deal with it for business. They're not even the big producers.
Yeah.
And if they are, just go get five more. Like, your life is not worth being on call 24/7. So
Mhm.
don't start your business that way. Respect their family, respect yours, and respect your inner peace.
Give me one action item to go do. Like somebody's listening to this podcast. We've talked about a lot of ideas and ways to do things and what's worked for you. Give me one action item.
I think that what would be a really good idea for every loan officer is to sit down and think about their brand. And if they're going, I don't have a brand, well, you need to get one because that's the world we're moving into. What do you specialize in? What do you care about? For instance, my sister's in the industry as well. She is all about RSUs, RSU income. Like no one knows that better than her. Her brand is, dealing with very complicated income. She doesn't really go out to other realms. She's hyper focused on it. What is your brand? Okay. Where do you want to be? Some people want to be mega producers, some don't, right? Where do you want to be? What are your boundaries? Okay. And then how are you going to get there? That's it. But you got to know what your brand is. And I think that's where most people fail is they never establish a brand. They're just always thinking about, oh, I'll call realtor, I'll call realtor. Well, that's great, but what are you selling? Like what's your value add? And if you're like, I have a brand, but I'm tired, I'm worn out. Because there's a lot of people in the industry that are tired right now. It's been a hell of a 5 years, right? We had all the refinances, all the craziness of pre-approving 967,000 people in 2022, and like two would get their offer accepted. Then we've had like the Hunger Games for the last few years where you're like, people are tired. And it's like,
Hmm.
there's some people thinking of leaving the industry that shouldn't. And what I would say is like, once upon a time, I was thinking of leaving the industry. I was doing fine, but it's the stuff like I was just like, Jesus Christ, like I don't want to answer the phone at 10. I'm done. Find your passion. Find what you want to give back and what you want to change. And my passion is definitely the education, heavy in VA. Like I'm proud to say, like after I hit number one in VA this year, I texted Victor at Rate and I said, hey, like, can we do a fundraiser for veterans? Like it would be so much fun. We
Hmm.
raised over $1 million in 7 days. The entire company came together to raise money for veterans. So it's like, find a purpose because without a purpose, this industry is really tough. And
Hmm.
I don't think I would still be in it without a purpose, to be honest.
What's your son doing? If you don't mind me asking, what's your son doing?
So Jack is in school still, and he is a business major, but he's helping with my YouTube channel. He's
Nice.
actually the one that originally told me to get on YouTube, 100 years ago, because he's like, Mom, you should be on this. And I was like, what? But he was watching so much YouTube that I said, okay, I'll try it. And here we are.
Has he come to you with his talent manager asking for his 20% of residual? No, I'm just kidding. So that's
No,
outstanding.
look, working with family is interesting because I mean, we will get into some knockdown, drag out fights because I'm very passionate, right, about how I want stuff to look like. And he's like, no, we should do this or that. And I'm like, no, but it's good because he breaks me out of my box a bit.
Yeah,
So he's part-time for us. It's nice to have and to spend some time with him where I'm not saying, hey, honey, hold on, I've got to answer this real
yeah.
estate agent's call about their boyfriend.
Good for you. I think working with family is great. I think it's just a wonderful that neither one of my kids had any interest whatsoever. One of them's a doctor and the other's an engineer. So they did
That's
fine,
right.
don't they? Oh, they did fine and they love what
Yeah.
they're doing and everything. But it's just I don't know, having somebody in the industry would have been, to pass the torch would have been kind of fun too.
I don't think he's going to stay in the industry. I think he's going to help on the YouTube social front, but he has different aspirations,
Sure. Yeah.
which I support because I think being a mortgage loan officer, I think it's a hard life, and I don't think anyone
Mhm.
talks about it enough.
Yeah, good stuff. Well,
Yeah.
Jennifer, I could sit here and talk to you for another couple hours. You're a fascinating person. You got to have a great story. Love your passion. Is there something as we close? Is there something I should have asked you in this brief time that we had together? Is there something I should have asked you that I didn't?
No, but I think I want to I put down some notes of like what I think, could really help like new loan officers.
Okay.
And I think something is networking with other loan officers, whether they're in your company or outside of your company. If I look at, how I've been successful, it's been with a lot of loan officers, other loan officers help, teaching me how to do stuff, sharing marketing ideas. Greg Shear has the hashtag all of us. And I agree. I think that you need the support, make friends, share ideas. It puts everybody in a better position.
I couldn't agree. We do a little thing called the Loan Officer Breakfast Club. I think we have like 600 LOs on every
Oh, that's
morning.
great.
And I couldn't agree. I've learned so much just
Mhm.
talking with you today. And I learned so much from each person. So hanging out with the winners, right? And the people that are passionate in a good way,
Yep.
and staying away from the naysayers and the doomsdayers.
Mhm.
I don't, we don't throw rocks or anything. We just roll our window up,
Yep.
and just drive right through that neighborhood. And so anyway, I love what you're doing. I'm a huge fan. And thanks so much for being on here today and helping to inspire so many. I appreciate it.
Thanks for having me.
All right, great. Hey, for our listeners, thanks so much for being here. Be sure to reach out to Jen and give her some love for sharing her information here. And thanks for being a subscriber to the Loan Originator Edge. And thanks to our friends over there at the Scotsman's Guide. And by the way, if you're not subscribing to the Scotsman's Guide, boy, that is a really, really, really good thing to do. There's a lot of great information in there. And I don't. It's an odd thing. I don't learn just from the ads. I'm sorry, I don't learn just from the articles that others are doing. I love some of the advertising too, because the advertisers are targeting us as loan officers and brokers and branch managers and finding out some of the things that's available to us. It's been really, really cool for me. So I've been a subscriber for literally decades on Scotsman's Guide. So anyway, appreciate it. Thank you very much. And we'll
Thank
see you on
you.
the next episode of Loan Originators Ed. Thanks, Jen.
Thank you.